it's like honey. You know, you just put it in and it fixes it. Well, ladies and gentlemen, thanks so much for taking the time to tune into The Scoop. I'm your host, Frank Chaparro, Director of Special Projects at The Block, and Sergey. We've got Sergey from Axelar once again for the third part of the series that we've been doing, exploring the wonky world of DeFi. I always love when you join the program because you ask good questions and kind of put a little bit of the pressure off of me, being sort of like a quasi co-host. You do a good job. They are paying me to say that, so there is that element there. And you always bring great guests. And this week we've got XRP Ledger joining us, and you guys have been on the show plenty of times. But this is your first time, Jasmine. And you're the head of product, correct?
Yes, for Ripple X, the business unit within Ripple that focuses on XRP Ledger.
Amazing. Well, that's Jasmine Cooper, ladies and gentlemen. So we're going to be talking about RWAs, tokenization, the juxtaposition of public and private chains, and how they're all connected, and how this whole interoperability thing works. We've talked about tokenization on this show a lot, obviously. I mean, if you look at the explosion of real-world assets on chain, it's been nothing short of spectacular the past year. Let's just start with sort of explaining where both of you sit in this category, and then we can get into the trends that you see shaping it.
Yeah, I mean, I'll be brief. I mean, I think from our side, I think we're seeing like just an explosion of RWA interest across the board, right? And what that practically means is that I think one of the biggest use cases for crypto, which is tokenization of real things and making interactions across them more efficient, is finally hopefully we'll start opening up, right? And with some of the regulatory clarity, I think hopefully we'll get to the next phase. And from our side, we're happy to make sure the assets are accessible on any chain, right? From any wallet across the Web3 stack, and make the whole experience as seamless as possible. But I'll pass it to Jazz. I think they are doing a lot of exciting things there.
Yeah, thanks, Sergey. And yeah, to give a little bit of background, as folks are learning more about the XRP Ledger and how it differentiates from Ripple. XRP Ledger, as you guys know, is a layer 1 blockchain, public open source technology. Ripple is a key contributor to the XRP Ledger, and our CTO was one of the founders and original developers of the ledger. So, as I mentioned before, Ripple X is the business unit within Ripple that focuses on the ledger itself, as opposed to the other side of the business is building payments and enterprise software products, custody, stablecoin. So within Ripple X, there's sort of two main functions. One is building on the ledger. So we create new features through amendments that eventually go through the consensus process to add to the ledger. So we'll add things like automated market making, NFTs, different sort of features and capabilities for the L1 that anyone can really use and developers can all tap into. Tooling as well, so client libraries, documentation. And then we also support existing projects in the community through grants, accelerator programs, partnerships to help them discover the ledger and grow their projects as we start to build out this ecosystem. So for us, real world assets, tokenization, interoperability have been really top of mind, throughout 2024, and we're excited to double down on that in 25.
Yeah, Sergey, I think you're 100% right. Like this sort of the regulatory, the fog of regulatory war is lifting now that we know that it is almost 100% certain that one chair, Gary Gensler, will not be in his seat. And I think we've seen the power of that unlock in the price of a wide range of assets tied to DeFi, right? I mean, I've been talking about this with my colleagues over the past few days. And really what it means, right, is that these assets can be much more useful in a way because, you can be a bit more, people can feel more comfortable using them, knowing that they won't have to face the ire of U.S. regulatory bodies. Putting that aside just for a second, that's going to be an unlock for 2025. For 2024, we could just look back. I'm curious what you guys think was the catalyst or the fuel that led to this RWA boom, right? Because RWAs were, I mean, it was like, who cares, right? Nobody was really, there wasn't really necessarily a product market fit, or people were tokenizing the wrong things. If we remember like the days of 2018 when we were tokenizing college dorms in South Carolina or whatever it was. What changed? Like what happened this year that made this something that we're even talking about on this show on November 8th?
Yeah, I mean, I'll give my 2 cents, but I think the big thing that happened this year are more of the institutional adoptions, of Bitcoin and Ethereum ETFs coming to the markets, right? I think you have seen a very different narrative from large asset holders like BlackRocks of the world talking about the assets, right, over the last 12 months, and not referring to them as, things that nobody kind of cares about, but really understanding the whole value prop. And if you, and then like over the last 12 months, like we have worked with a lot of institutional partners, like, JP Morgan, like Apollo, Deutsche Bank, and they're all doing actually real work trying to understand what are the efficiencies of using ledgers, right, for manipulation of RWAs, right? And previously we've never had that, right? It was always kind of the crypto industry itself going and telling these narratives, but they were not quite clicking. Nobody was experimenting with them. Nobody really tried to understand the true value proposition. If you look at some of the reports now that come up, from these institutions, they're saying things like, "Hey, we can take 3,000 steps and we can put them in a few smart contracts and automate a lot of backend processes and make everything a lot more efficient." Okay? And these types of conversations on efficiency, pure efficiency, instant settlement, global compatibility with payment ledgers, just based on the newer technology stacks, are I think eye-opening for them, and that's why we're seeing a lot more interest. I'm actually curious from Jaz's perspective as well what she thinks, and I also want to talk about how easy it is to actually launch and use RWAs these days, right? Because we haven't really talked.
Well, that's the thing. I think Jasmine can definitely unpack that for us, right? Like Jasmine, what do you reckon at the ledger layer? Obviously the concept of RWAs is quite appealing, but what's the expression? A dream without a plan is just a wish. What about at the ledger layer has made it easier for folks to build on things like XRP Ledger or others? Was there some sort of shift in the actual ability for folks to build, the tooling that changed significantly this year? What's your opinion?
Yeah, I guess starting with the XRP Ledger and the layer one, the way that you can go about tokenization on XRPL is one level simpler than it's ever been in the past. So as opposed to having to build and deploy your own smart contract in order to issue a fungible token, for example, you can basically just call a function in a JavaScript library and issue your token, and you have that in a couple of minutes. A non-engineer can even do that. So that's become simpler, which I think is very important. What that's also gave way to is the development of various platforms, tools, technologies that are one level removed from even the client libraries on the ledger itself. So we see a huge number of tokenization platforms, from Securitize, Archax, Addix, all of these players that are saying, hey, just come to our site. This is familiar user experience. Issue your tokens here. We'll offer a marketplace for you. And so that's sort of lowered the barrier to entry for some of the institutions that Sergey mentioned. So as they've come on board, you have big trustworthy names like BlackRock, JP Morgan, that are issuing tokens. And now the rest of the institutions are saying, hey, maybe this is interesting. Maybe I should try this. Maybe this isn't this, crazy futuristic technology, but something that can actually help my business, help me increase profits, lower costs, et cetera.
And just to double click on that, right? So you're saying that essentially instead of building kind of a smart contract, right, for launching your functionality, having to go through like audits, testing phases and getting everybody comfortable, you guys kind of have built this functionality almost like at the core consensus layer, right? That's all packaged with simple API that you don't have to worry about security. You can just issue instantly, these assets and kind of call it a day, right? And start benefiting them. Is that correct?
Yeah, that's so a lot of the functionality that people use the terminology smart contracts for is built into the core protocol layer on XRP Ledger. So that's everything from your tokens, so fungible tokens, non-fungible tokens, soon to be semi-fungible tokens, as well as DEX functionality, so order books, creating offers, depositing into an AMM type DEX as well. All of that exists at the protocol layer, and that really lowers the barriers because now your method of interacting with that is not a Solidity smart contract that you need to be a Web3 developer to know, but it's JavaScript, Python, Java, your typical languages that Web2 developers know and have experience working with. So I think that'll be really helpful in bringing this new wave of builders onto the blockchain. And yeah, I think another advantage there that I like is the aggregation and concentration of liquidity. So rather than having 15 different DEXs that are all competing and siloing liquidity for, say, a USDC wrapped ETH pair, you now have one, and all the liquidity concentrates there, and the benefits get passed on to traders and users.
And if a developer, right, or institution then needs to kind of customize, some of the functionalities around it, like how does that, process look like? And do you add things to the consensus? Are there other, capabilities around the ledger?
Yeah, so it's a trade-off. So there's a fixed amount of configurability. Let's say taking an NFT, for example, at issuance, you can decide, is this NFT transferable? What asset can I use to purchase it? Is it only XRP or is it other fungible tokens too? Can it be burned? And so you can configure all of those parameters upon issuance. And then, of course, it's immutable after that. But that is a trade-off with the XRP ledgers. You sacrifice some of the customizability that you get on, say, Turing Complete EVM. But what you get is easier access. This has been through security audits. It's not built by a random developer in a basement somewhere. It's gone through consensus. Validators have agreed to bring it onto the ledger. So you get a lot of trust and security with that as well.
And does that lend itself to a specific type of asset? Or, when you think about the whole universe of layer ones, would you sort of, would you suggest that maybe certain blockchains are more purpose-built or configured for the tokenization of a specific asset? As in, is there a sweet spot for maybe XRP Ledger versus others for certain asset?
I mean, yeah, curious with just the things, but from my view, I think it's not that it's kind of a different assets. It's more about, I would say, like different blockchains right now finding different product market fits in different markets, right? And I think
in different like geographical markets or different types of like segments,
different geographical markets, different segments, different communities, right? You definitely have, chains that are used a lot outside of US, and say in Asian markets, right? And like have a lot of institutional eyes there. You have chains within the U.S. markets, but also by the verticals. I think when we look at RWAs, right? Like, the team is leading here a lot of the good initiatives. So definitely, kind of a virtualization. I think that starts to happen.
Yeah, I'd agree. I'd say less the asset itself and more the type of use case that you're working on. So if you want to be experimenting and innovating in creative ways to create, on-chain native derivatives and back them by various CDPs and kind of really be at the forefront in financial protocol innovation, XRP Ledger is probably not the chain for you. But if you're looking to do a base set of functionality very, very well, issue a bond or a different type of asset, make payments with that, trade that asset, then XRP Ledger is, tried and trusted, probably the best place for you to be.
I was actually curious, right? As you issue assets on XRP Ledger, what are kind of additional sort of help/services you can bring to the asset issuers, right? So, as an example, we talk about regulatory frameworks a little bit. Is that something you guys are looking to help, kind of a projects kind of clarify? I've heard a lot of questions around, KYC, AML support, right, for some of the asset issuers. Are you guys thinking of like bringing that set of support suite products to the ledger itself?
Yeah, that's a good question. I think if we're to offer specific products and services for developers in that way, advisory services, that would probably come from more of the other side of Ripple. Maybe that's something that custody team could look at down the line, to add on to some of the light tokenization services they offer today. From a Ripple X standpoint, we really try to offer sort of just developer tools, and it's more of a self-serve type model. So that's where we're focused right now. But I think that will be a really, really important area to focus on in 2025. I think that, the industry is moving past, cutting edge developers that want to come and piece together different pieces of, technical documentation and figure out how to build their solution. It's kind of like akin to, 90s web developers using their own protocols and frameworks like HTTP, HTML, and kind of managing all the low level aspects of what they're trying to build. And now I think what they're looking for is akin to, 2015, 2020 web developer, where you have frameworks, like Node.js and Django. And these are the different pieces that you use. So you can focus on user experience as opposed to low level management. So that's where we're focused now on Ripple X, is how do we move towards some of these frameworks and really just lower the barrier, even further for blockchain developers.
Are you guys now working on a EVM sidechain as well, right? Could you tell us more about that? Like, what's the motivation there? What's the purpose?
Yeah. So we are working on an EVM sidechain. So that'll stand, alongside XRP Ledger. XRP will be the native asset that will be bridged over via Axelar. So thanks for building a great product for that purpose. And back to what you said before about what if you want to customize in this way, the XRPL doesn't have pre-built into it. And so that's where the EVM sidechain comes in. But the way that we're thinking about it, at least from a Ripple perspective, this will be a public chain. Anyone can build on it, whatever and however they want to. But from a Ripple perspective, we're really trying to test the waters with Axelar general message passing and see how we can use the EVM sidechain as sort of a back end for XRPL mainnet applications. So we have a partner that's building a lending application, for example, where their contracts are on the EVM sidechain. But from a user perspective, we don't want to stop the momentum of a decade of users and liquidity building up on XRPL. So, this application, say I want to deposit it to the protocol, will be available from an XRPL mainnet wallet. And so the user's not even aware that their funds are being, siphoned over the EVM sidechain, and that's actually where the smart contracts are. And a lot of that is thanks to, Axelar technology and GMP. So I don't know if you want to give a little bit of context on what GMP is and how that works in case folks aren't familiar.
Yeah, I mean, high level, right? What we're doing with kind of general message passing is allowing for messages to travel from one chain to another, right? And so in this case, if XRP main ledger can talk to the EVM sidechain like seamlessly, it almost acts as a single unified environment, to your point, right? And then the sidechain now becomes this kind of a playground where you can go and kind of customize, deploy your own things, but we don't want to fragment users' experiences. We don't want to fragment liquidity, to your point, right? And so general message passing essentially is a primitive that would allow you to speak as you're in a single chain, but now you have another powerful backend that you can use and you can extend to the developers, right? So you can either deploy things at the consensus layer, like that are audited, that are robust once they're ready, or put them in a EVM smart contract layer. But the interoperability within them makes UX and DevX seamless, which is has been our goal for the last few years. And I think it's really important that you guys are taking that approach, because I think fragmentation, if nothing else, is the biggest killer right now in the for both developer and users in the whole space. And like as we think about RWAs and getting them to the next phase, if we don't offer,
people need to feel like they're existing in one environment.
Yeah, I mean, exactly,
and not being torn apart by different chains.
Like all the RWA conversation that we have, it's like which chain, and like you don't have to choose, right? Like, you go issue on XRPL as your main chain, but you're not in silo, right? Like you still have on and off ramps, and like that's your that becomes your backend. And I think it's going to be it's going to eliminate a lot of the due diligence costs. Let's say that if we can eliminate that.
Well, it kind of probably makes it less burdensome to enter the space, because you don't have to worry about whether or not you're tapping into the right pool of liquidity.
Exactly.
But it does raise the question of when you start with issuance, where do you there's still a question of where do you start?
Yeah.
Even if once you start, it kind of doesn't matter as much.
I mean, I think here that's kind of exactly the ecosystem and the liquidity, right? And like the DevX that's what matters the most, right? Like imagine these days, like you deploying an application, like a website, you deploy it on AWS or Google Cloud. It's still accessible for everywhere, but your choice of the platform depends on the ecosystem and the things that you need, right? And the tooling that you offer. And I think that's why it's very important to offer the types of experiences that the XRPL team provides, where you have, for teams that want to have everything bulletproof and audited, check, you have an API. For teams that want to customize, great, you have an EVM environment where you can customize that's still interoperable with them. You want liquidity, great, it's all there. You don't have to go and like shop around it for them. So that ecosystem becomes incredibly important. But Jazz, I'm curious, on your thoughts as well.
Yeah, no, completely agree. I think starting with where the ecosystem makes sense for you, both from a technical development standpoint, as you pointed out, as well as a more commercial ecosystem standpoint. So, if you're looking to focus on gaming in the metaverse, maybe you want to look at a different chain, Polygon or one of the others. XRPL is probably not the best place for you because there's not a huge number of games and gamers readily available. If you're looking to focus on payments and trading, you have the technical functionality, you have the users, you have the market makers. XRP Ledger probably makes more sense in that case. So I think your Google Cloud AWS analogy makes a lot of sense, and it's similar in blockchain now.
I mean, I think another analogy that I'm thinking of is just, capital markets, looking at capital markets and thinking about when a company wants to go public or raise capital, they're typically going to be drawn to the United States because they make up 50% of global U.S. equities, and that's where the liquidity is. Now, of course, we do have the plumbing and the rails on Wall Street for investors in non-U.S. markets to invest through different types of derivatives, through special purpose vehicles. So those markets are accessible even if you go public in the U.S. If you're a Swiss investment manager, you can still access those opportunities. It's similar here. We finally have the railings by which folks can tap into an opportunity on a specific chain, even if they're operating in a different environment.
Yeah, Frank, I love that analogy, but also the last few years, if you look at the kind of private markets, more and more of them had to actually turn and look outside of US to go public because of all the friction that was in the process, right? To kind of go public in this market.
We're almost at a point where it's more seamless in crypto than global equities.
My actual long-term hypothesis is that tokenization in crypto and kind of going public are going to converge to something wonderful and beautiful over the years, right? Where kind of what it means to go public and access liquidity, it's to be TBD and defined by the project or their demands or their regulatory constraints. But I think there's going to be a spectrum. It's not going to be sort of black and white.
Yeah, that's a very exciting future state that I would echo, and that's where the limiting factor of blockchain starts to become regulation, and that's not necessarily a bad thing. You need safeguards in place, but I very much hope that we can find safeguards that are truly safeguards and not control mechanisms. Because I think that would be such a beautiful state that you can use blockchain for truly what it's meant to be. Of, I want to go public, I want to raise money, I can access all of these distributed wallets directly all around the universe in fractions of a second, as opposed to, this archaic 12-step process to list on this, siloed exchange. It's just, it's not optimal. And so if we can get regulation to a place to enable this, blockchain-powered future state, I think that would be a huge advantage on both the demand and the supply side.
Yeah, and I think in that the definition of what it means to go sort of public also, becomes mutable, right? Because you can say, I'm sort of going public for the purpose because I need public governance, right? Or I'm going public for the purpose that I need, I don't know, public utility to run, I don't know, some validation functions, right, for my protocol, or I need public utility for the purpose of kind of a fundraising, and disclosure mechanisms and the controls and safeguards should be appropriate, right? Like for some of those different features.
Yeah, well, it's within the power of the agency to they have the power through Reg D exemptions to do this. They just the will isn't there under this current administration. It's a very interesting point. I mean, I guess what do you think is even keeping? We're clearly not there yet. We have crypto firms that are public and they're not necessarily eating their own lunch, as it were, right? Like, what's to stop, or wouldn't it be amazing or great for a firm like Coinbase when they're issuing debt to do it on chain? Naturally, you think that they'd be the first to do it or be doing it now, but we're still not at that point.
Yeah. We need clarity, right? Like, I think we need those frameworks to be put in place. Like, it's not complicated. You just need to have desire and like have some, a bunch of smart people from the industry kind of come together and work with the regulators. But I'm pretty hopeful. We're just at an event with kind of Robert Leshner, and he's doing a lot of work in RWA tokenization. That guy is like, he's like smiling all around. He's so excited. There's all the positive change that's going to come, over the next few years. I think I'm seeing a lot of good momentum, throughout the whole industry of the kind of what's about to happen. So let's see. It will be fun.
He was just on the podcast a few days ago.
Nice.
So if you didn't listen to that one,
was he smiling mostly? Was he excited?
He's very smiley. Yeah, he's very very happy. I'd be happy too if I had his bank account. So when we think about interoperability, what is, how much more work is there to be done? Because we're not at a perfect state yet. And what about the security thorns?
Yeah, I mean, to your point, the work is not done. I think the work is not done because the developers also have to, embrace, in some sense, interconnected Web3, right? I think traditionally, there's been a lot of mindset of I build on a chain, and I'm kind of done. And now more important people realize that, okay, yeah, you build on one chain today, but you want to have distribution to all the other chains, and like, how do I do that? Right. And people kind of think about it almost like as an afterthought in many cases, as opposed to a first thought, right? You launch somewhere, you need to think about distribution, not just your technical product. And I think, interoperability at the core of it offers distribution where if you're going for an ecosystem for its, benefits and technical merits, you're not making a bet that the same ecosystem has to give you all the answers and all the distribution. You're choosing it and can still have kind of interoperability rails and distribution that way. So yeah, I think there's a lot of developer education work. There's definitely a lot of technical work that needs to happen along the way. But I think as a whole industry, we're kind of getting there, and people are embracing that more and more.
Yeah, I mean, Jasmine, can the devs do something? That's the question.
Yeah, I mean, I agree with what Sergey said. I think we're rounding a corner in the industry. I mean, if we're honest, a lot of development early on was funded by foundations and L1s, and so there's an incentive or mentality there of let me redeploy my EVM smart contracts on another chain and kind of wipe my hands and be done with it. But now we're looking at, okay, institutions are coming on board. They're bringing their customers. Blockchain has a chance to actually reach mainstream financial use cases, which is really exciting. And so I think the mentality now is less about how can I deploy as quickly as possible, but how can I deploy in a way that sets me up for user adoption, good user experience, removing fragmentation. And so there is an educational curve with developers of why should I do this extra step of making a cross-chain application or making my application accessible across chains? And I think that'll become more and more obvious as the adoption starts to come and they see, wow, not only can I access users on this chain, but I can access users on the 60 or so other chains, that Sergey and team have connected. So there's a big opportunity there. We just need to make it crystal clear and make the DevX, as strong as possible.
So when you think about the next 6 to 12 months, what are some of your guys' priorities? What will you be focused on in rounding that corner, as it were?
I mean, for us, going live, with all the chain commitments and kind of all the integrations. There's a number of teams that are building pretty exciting integrations and making it accessible. So that should be super fun. And we want to make the whole interoperability stack as permissionless and lower the barrier for integrations, right? So, an example, you take another compute environment, you customize in the consensus of smart contract language, you should be able to interoperate with everyone else. And what it means for us is that innovation can continue happening without having gridlocks across the space, right? So you can innovate at the consensus, you can innovate in the compute, but you're not going to be living in a silo if you did something good there. And you should be able to talk to everyone else. And I think, frankly, we as an industry, to the broader community at this point, need to have a very unified stack that we offer, very unified messaging. And I think that's what gets us to the next level.
How are sort of the demands or requirements of a institution different from other types of builders? What do they require?
I can take a stab at that. I mean, for us, it's compliance first, compliance built into every aspect of the protocol. So we're working on two in particular right now. Excuse me, my team's working on adding two native capabilities to XRP Ledger that are purpose built for institutions, and that's permission trading and permission lending. So we're working on a concept called permission domains that leverages on-chain verifiable credentials issued by trusted parties, selected by the domain owner, that can choose, okay, who can trade within this domain? And then you can have, folks that are allowed to trade in the domain actually arbitraging between the public and private DEX to keep the system moving as seamlessly and as highly liquid as possible. So that is actually what's allowing, even Ripple, we're dogfooding, we're our own first customer to bring a portion of its, payments volume onto the decentralized exchange as opposed to centralized exchange. So as compliance of decentralized protocols starts to catch up, I think that's where a lot of the, what's now CeFi volume is going to start to move onto DeFi rails. We're doing the same with lending as well. So, under collateralized loans with off-chain credit underwriting is where we'll start and slowly move towards collateralized, and using that same on-chain verifiable credentials and domains model to support a permissioned lending environment will allow corporations, institutions, et cetera, to really embrace that.
That's interesting. How are you building out the two sides of that type of product in terms of borrowers and lenders?
Yeah, that's a good question. So from a Ripple X standpoint, I mean, we really just see ourselves as technology builders and providers. We expect some of the different lending marketplaces out there to leverage the technology because we think it makes a lot of sense in terms of access, in terms of meeting regulatory compliance. So we're not actually building a lending product as Ripple X, but we think it makes a lot of sense for even Web2 loan originators to bring their business onto blockchain rails. And our job is to build really great technology and then make them aware of the opportunity and the advantages that it can bring.
Amazing. Well, any closing thoughts, guys? What are you guys most excited about?
I think we're talking about all the things that I think excites us. I mean, I want to see more assets kind of finding and gaining the efficiency, right, of the blockchain tech. We haven't talked about some of the kind of boring use cases, but even things like tokenization of car titles actually excites me. If you ever move the car across the borders or across the states, it's a huge pain. And I think if kind of a global digital ledgers can solve a lot of real problems that I think people are going to have to deal with as they deal with pretty legacy systems.
Yeah, I can't find my registration, as a matter of fact.
Yeah, we'll go.
I think I've got to like go down to Florida and go to the DMV or something. It's definitely a headache. Where can folks learn more about what you guys are working on? Where can they find you? Not your location, but like digitally.
For us, you can go to axelar.network, find a lot of information about all the protocols that have been connected through the stack.
On our side, RippleXDev on Twitter. I'm at JessieCoop on Twitter. And then XRPL.org has lots of great documentation and tutorials to get started with building.
Awesome. Well, let's build. Thanks so much for taking the time.
Awesome.
Thanks so much for having us.
Great chatting.
This was great.
Sergey, this is kind of a bittersweet moment, right? This is the last installation of the 3-part series that, Axelar and the Scoop have partnered on.
Well, I hope we'll do more later.
Well, we can do more. It's been quite the saga. But let's also take just a moment, because, you guys do a good job of not necessarily shilling too much during the actual recordings, what you guys are working on. So let's give you that opportunity. It's almost the end of the year, so 2025 is right around the corner. What are some of your high-level product priorities for next year?
Yeah, I mean, the big push that we're making and we're launching over the next year is the Axelar Mobius development stack. And what essentially it is a new framework for connecting and launching multi-chain applications that span all of the blockchains very seamlessly, right? So kind of at the core of it is a set of protocol and a framework that anybody can leverage to connect their chain to the interconnected web of Web3 in some sense. And above it is a set of tools and services that allow you to do things like launching your tokens across multiple chains in one click, abstracting gas services, having open permissionless interfaces to interact with all the blockchains at the same time. So yeah, the MDS framework is something we've been working and having in development for a while, and it's going to start. It is already going live, and many of the integrations that we talked about throughout the last few series are the ones that are going to go live in the mainnets in a few months. So that's going to be very exciting.
And how does that sort of change the game? From we've talked a lot about user experience and developer experience.
Yeah.
How does this sort of mollify certain issues?
I mean, like at the bottom, whoever you talk to, either Web3 native developers or some of the institutions that we talk to, we're wasting a lot of cycles trying to understand where to build. Okay. And like telling people what are the different trade-offs, what are the different risks that they take when they pick an ecosystem, right? For initial go-to-market, for getting live. And I think what we're trying to do is to abstract all of those choices away and say, you can pick the best chain today, but you're not going to be sacrificing properties of other chains or other users that could be interacting with your application. And I can tell you, we're going to save like 50 to 70% of people's time just building and launching in the Web3. And I think this is very, very important as we're seeking kind of a broader distribution for the entire Web3 stack.
I mean, Galen, your main PR guy over there made the joke about going to a restaurant, and when there's 50 things on the menu, how long does it take you to decide what you want to eat? Whereas now we're in a world where it doesn't really matter. It's going to taste the same, no matter what you get.
Yeah, it's fewer choices to make, right? Faster go-to-market and broader distribution. As simple as that.
Awesome. Well, good luck, and we'll definitely be catching up soon.
Awesome. Well, thanks for having me. It's been fun. For people that want to learn more, go to axelar.network/Mobius, and you'll be able to find everything that we're doing at the stack.
Amazing. Thank you so much.
Thanks, Frank.